Guys, welcome to another Week 8 video. This week's video will cover the trading week running from Monday the 12th of July to Friday the 16th of July 2021. Now, our attention this week will turn to the Kiwi dollar with the upcoming RBNZ policy meeting scheduled on Thursday. Now, the Kiwi dollar has been a very stubborn currency to trade over the past couple of weeks. After that initial upside pop we had following the RBNZ's hawkish tilt on the 26th of May, the currency failed to hold on to any of those initial gains, and it has been grinding lower ever since. Now, this has been quite surprising for us, as the fundamental outlook for the Kiwi dollar has continued to improve on multiple fronts, but markets have been happy until now to underprice the currency's fundamentals. Now, what made the RBNZ shift significant for us was the fact that they felt comfortable enough to release rate projections for the very first time after the onset of the pandemic, which showed that they were optimistic enough about the recovery to offer guidance, but also optimistic enough to price in higher rates from as early as Q4 2022, which at that time was on par with that of the Bank of Canada. The reaction from the rates markets following the policy meeting was very interesting though, because yields gave up most of that post-meeting induced gains very quickly. And also 1 year OIS prices didn't really budge on the news, almost as if the markets were already pricing in that as an outcome, or as if the rate markets alongside that of the Kiwi dollar just wasn't really convinced by that hawkish tilt. And it wasn't really until we had that stellar Q1 GDP print on the 17th of June that we finally started to see the short end yields on the 2-year side and the 1 year OIS prices finally starting to significantly price in tighter and faster policy normalization for the RBNZ. Now, the size of that GDP beat was significantly higher than the RBNZ's expectations, with the bank only expecting a contraction of negative 0.6%, and the actual print came in at 1.6%. So it was a massive beat, far above what the RBNZ as well as the markets were anticipating. Now, when it comes to inflation, unfortunately, we won't have updated Q2 data until 2 days after next week's RBNZ meeting, but the preliminary survey data has seen some interesting numbers. If we take a look at the Kiwi business survey, that showed a 1 year inflation expectation print of 1.87% for the second quarter. And the big surprise was the ANZ New Zealand Roy Morgan consumer confidence for June that showed inflation expectations surging to 5.1% on a year-over-year basis. Now, even though these surveys do not always share the best correlation to actual CPI data, the 5.1% print is still miles ahead of the RBNZ's expectations of CPI that is expected to peak at 2.6% in the second quarter. Furthermore, we had the recent NZIER survey that showed a big change in business sentiment and also added to inflation expectations by stating that 52% of businesses expected to raise prices in the third quarter of the year. Now, that brings us to the week ahead and the RBNZ policy decision coming up on Thursday. Now, after the NZIER survey, we had a few market participants that brought forward their rate hike projections for the RBNZ, with some expecting a lift-off in rates as soon as November this year. Now, this seems like a consensus view right now because OIS pricing implies more than an 80% probability of a hike by November. So markets this week will want to see whether the bank pushes back against these very aggressive expectations or whether they actually step forward and validate what the market is expecting them to do in November. So with interest rate expected to remain unchanged, the main focus for this meeting will revolve around what the bank has to say about rates, whether they're going to fall in line with the market's current expectations or not. Now, there's also the question of the LSAP QE program. It's been no surprise that the bank has slowed their purchases considerably over the last couple of weeks, but they have previously said that markets shouldn't take that as a tapering signal, as it was purely based, of course, on reduced issuance. Now, surely, if the bank is planning to hike much sooner than previously projected and hike as soon as November this year, alongside the market's current expectations, then announcing tapering would be a necessary first step. So that will be in focus in this week's meeting, because if they are going to move forward with potentially hiking rates, then one would assume that they are going to at least announce tapering to happen between now and before November. Now, there's just 4 months remaining between now and the November RBNZ meeting. And even though the economic data has surpassed expectations, and even though the virus situation remains well under control in New Zealand, we've seen the vaccination program and rollout largely moving in line with the RBNZ's previous expectations or projections, We do wonder whether there's enough time between now and November for the bank to completely stop quantitative easing and also hike rates with all of the remaining uncertainty in the global economy still due to the virus. So in our opinion, there is a real risk that the market has gotten a little bit too aggressive in their normalization expectations right now. And with this hurdle pretty high going into the meeting, there's a chance that the bank won't deliver the hawkish goods that the markets have already priced in. But given the underpriced levels for the Kiwi dollar, a hawkish confirmation could be just what the doctor ordered to finally see the Kiwi dollar break out of that recent slumber and trade more in line with its fundamental outlook. Now, turning to a trading plan for the week ahead, it's going to be fairly simple. Looking for either a potential hawkish outcome, looking at Kiwi 10-year yields, the Kiwi dollar, and looking at the Kiwi yen for some potential upside, because that is a currency pair where we do maintain a bullish bias. Now, looking at the potential hawkish outcomes, previously the bank said that they still needed to maintain the current levels of accommodation for a considerable amount of time. So from a hawkish point of view, if they drop that language and they no longer see the need to maintain current stimulus for a considerable amount of time, that is expected to be something the markets will be looking for a potential hawkish tilt. If they explain that the May hike projections will likely be brought forward at the August meeting, that'll be a good signal for the market from a hawkish point of view as well. If they stress that the better economic data means that the goals they've set will be much sooner met than previously expected, that'll also be a signal for the markets and nudge in the market's direction in terms of their rate expectations. And if they, come out and announce tapering of bond purchases, which in our opinion, should happen either now or in August, if they are planning to hike rates in November, that'll also be a very, very bullish outcome, hawkish outcome for the RBNZ. From a dovish point of view, the exact opposite. If they stick to that current language saying that, hey, we see the need to maintain the current levels of accommodation for a considerable amount of time, that'll be for the markets, we think, a signal for specifically for those hawkish participants saying that, hey, we think you've been getting a little bit too aggressive with your expectations. If they further push back against that aggressive normalization expectations and stress that they are going to stay patient, also we'll see that more as a dovish tilt from the bank. If they state that, yes, we've seen better economic data, but that doesn't necessarily bring forward our policy normalization, that's also something they can throw in there as a potential warning sign for those aggressive expectations. And in terms of Kiwi, if they announce that bond purchases will stay intact and that they will continue to buy at the current pace without any real changes, then that'll also be more of a signal for the market saying that, hey, if we're not planning to even taper bond purchases right now, maybe thinking that we're going to hike rates in November might be a little bit too aggressive. So that's really the two plays that we're looking at from a potential hawkish and a potential dovish outcome. Do remember, guys, that the potential outcomes and potential market reactions in this report is merely meant as a guide for what we would expect in the event of these various outcomes, and the markets can always surprise in the way that it reacts. So this data is never intended as trade calls, but rather intended as a framework for you to use in your own scenario planning. Right, guys, so that's everything from our side. We hope you guys will have a fantastic trading week ahead. Good luck if you are planning to trade that RBNZ event. And as always, if there's any questions, don't hesitate to let us know.